4 reasons to be bullish on Meta platforms, aka Facebook, after the recent earnings. Unfortunately, stock price is down over 4% as I am recording this episode, and there's probably plenty of videos online of what went wrong with Facebook earnings, but today I want to take a closer look at what I believe can go right in the future for this company. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, and make sure to check out the pinned comment for free Discord, free tech channel, and so much more. I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now. So as I am recording this episode, the stock is down roughly 4.5% pre-market, and I do want to say I am a shareholder of Facebook Meta platforms. So just a super 10-second recap of earnings. In my opinion, there was nothing scary that would have me selling this company at the moment. Obviously, it wasn't the best earnings, but it was nothing far from my expectations, especially with the current kind of macroeconomics. But this is something we've seen in numerous companies, and the company has shared a lot of their headwinds in previous quarters. The first reason to be bullish on Meta platforms is the overall growth Facebook is still seeing. Facebook grew quarter over quarter and did grow year over year. The other important metric within this growth is daily active users also grew in United States and Canada, where I feel a lot of people always say, hey, Facebook is dead, no one's using that platform, but we continue to see daily active users on the rise here, year over year and quarter over quarter. Unfortunately, if we take a closer look at Facebook monthly active users, there was a bit of a decline. One of the biggest reasons is Europe saw a huge decline due to the overall Ukraine and Russia war at the moment. If we take a closer look at family daily active people, that also grew quarter over quarter and year over year. I do expect the growth would have been a little bit higher if it wasn't for the overall kind of tensions happening overseas in Europe. This final chart of family monthly active people is also up year over year and quarter over quarter. So overall, the first bullish reasons is this is still a growing platform. And for being an advertisement company, that is super important. The second bullish reasons is the overall engagement, and it seems to be improving due to their tools of Reels and other kind of tools that they are releasing in their platform. But before we go any further, if you want to take a closer look at some of the stocks I'm watching this week, make sure to check out this video above. So during the earnings, management mentioned that engagement trends on Facebook have generally been stronger than they anticipated, and strong Reel growth is continuing to drive engagement across Facebook and Instagram. So that's a great sign. They also mentioned that Reels engagement is also growing quickly. For those not familiar with Reels, these are these short-term video, pretty much YouTube Shorts, or also very similar to kind of TikTok's platform. Reels engagement is growing quickly. Last quarter, Reels already made up 20% of the time that people spent on Instagram. This quarter, they saw a more than 30% increase in time that people spent engaging with Reels across Facebook and Instagram. So they're kind of pushed to kind of these short-term videos are overall increasing that user time on their platform. Reels at the moment is being monetized, and it just crossed a 1 billion annual revenue run rate for ads. But unfortunately, Reels like these with short-term video are not monetized as efficiently as some of the other platforms or some of the other contents. So at the moment, unfortunately, the faster Reels grows, the more it would impact the overall revenue for the company in the short term until they finally make this Reels monetization fully efficient. But at the moment, it is important to keep users in the engagement, so the company is willing to take some of that short-term pain in revenue as long as they're able to increase the experience for users and keep them on the platform. Some may see the loss in revenue in the short term as a bearish thing, but others might see the overall growth in engagement as a bullish thing and just kind of wait it out until the company finally fully monetizes this platform. The third reason is this company's AI push, and I actually did a video of about a month ago where I took a closer look at how their AI push is helping the overall company. So make sure to check out the video above if you want to learn more, but they gave us some nice insight of how this is helping right now in the short term of things. So in the earnings call, management mentioned that right now about 15% of content in a person's Facebook feed and a little bit more than that on their Instagram feed is recommended by AI. They do expect these numbers to double by the end of the year as they continue this strong AI investment, and overall this increases engagement, as engagement is is increased, then these users are going to be able to see more ads, and at the end of the day, increase the amount of revenue this company makes from the amount of ads being shown to its users. They actually even gave us an example during the earnings call that after launching a new large AI model for recommendations, they saw a 15% increase in watch time in the Reels video player on Facebook alone. So right now we can see how this AI push has plenty of room to grow, and we also see how it is improving the efficiency of the overall engagement for users. The fourth and final reason is their overall push of getting more first-person data. Obviously, the overall changes that Apple has made has really impacted the company, and now they see that, hey, we can't be dependent on others. So the best way to kind of get this first-party understanding is by making it easier for people to engage with businesses in Facebook platforms apps. And one of the solutions helping with that is click-to-messages. And this is a form of advertisement that within the advertisement, it allows the person viewing the ad to be able to send a message to the business. So this is building up their first-party data because they get to see what kind of users click to what kind of ads and send messages to what type of companies. They do mention that click-to-message is already a multi-billion-dollar business, and they continue to see strong double-digit year-over-year growth. So the advertisement market, even though it's old, continues to see new solutions, and they continue to find ways to kind of grab that first-party data. So there are definitely reasons to be bearish on this company, but I do want to say there are numerous reasons to be bullish for this company as well. And here I mentioned 4 that I'm pretty excited, especially after this most recent earnings call. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.